Hello and welcome to yet another Friday market analysis video here on Landy's Crypto Corner. I'm your host, Landy, and this is usually a live stream. My apologies, I'm not feeling very well today, so I had to take a little bit of extra time to rest, which means that we didn't get to have our normal Friday live stream. So again, my apologies. I'll be back on Monday, and of course, I will still have my Bitcoin in 60 seconds videos as long as my voice can hold up later today and then over the weekend. But let's jump right into it. We'll take a look at Bitcoin here. We're still going sideways right now over here above the prior breakout region. And, it does not look very healthy right now, but we'll take a look at a few things that show that the bulls might have some hope to pull their butts out of the fire over this weekend if they can hold things sideways. But other than that, I do think that if they cannot, we are definitely going to see another test of this area here. This area here being 25,200 to around 24,750 at this low. And if that area does not hold up, I'd be looking quite a bit further down, just kind of taking it down one step at a time. But, mid $24,000 area, low 24,000, upper $23,000 area. And then most likely we end up seeing things somewhere around this low or this low over here at between that roughly $20,000 to $22,000 area. Now, I'm not totally set on that. As I said, the bulls do have a chance here if they can keep things going sideways. And we're going to take a look at that from a few different angles. We'll start actually with the Bitcoin in 60 seconds chart that I usually show you in those shorts videos. If you haven't been watching them, they're under the shorts tab on the channel. I do one just about every day. There has been a few days that I've missed due to some health issues lately. But today's live stream issue is not the same issue for those that do know what was going on the other day. This is just being sick. So if the bulls can hold the weekly here at 26K, you can see that the lower first standard deviation of the Bollinger Bands on the daily is kind of capping the top side of price here to the upside. And then we do have that weekly, holding support on a close at least here. It's been wicked many, many times. So if we do see the lower first standard deviation of the Bollinger Bands regained, that's currently at 26,350 or so. I would look for price to run back to at least the top side of this smaller consolidation range around this weekly at 26,750. And then if it can break out above there, then we focus on this monthly up here at around 27. You might want to take 27 as a round number, but 27,200 to 27,500 at the daily. If that area is recovered, I would look up to then the basis at just under 28K to that weekly breakdown area at 28K. And if we do see price trade above there, even in the lower term time frames, I would keep an eye on, this wick over here, basically right into this daily support at 28.45. Any recoveries above there, and I would be looking for this to try and head up to the overhead resistances here on the closes in the 29,000 to that upper first area around 29,400 to 500. Now, if this does break down, lower second is coming in right at this this particular high structure over here on a close, I believe, and it is going to be around that 24.7 to 24.8 region. We could even see wicks past it down to 24.5. If we did see closures outside of it or wicks past it, the other big area would be this weekly down here at 24,300. And of course, if that does not hold price up, or if it just provides a smaller bounce on any kind of a downside move, I then would be looking to around 23.7 to 24K. And then the big focus for me would be to watch if it were to fall through there, what the reaction is at the monthly around 23 to 23.3. because that's kind of the line in the sand for the longer term time frames. Support areas. You can see, excuse me, you can see just looking here, there are weeklies down below, but it's quite a big gap down to around 21.8. And then just under there, we've got 21,000. So 21.8, 21,000. We've got monthly at 20,500. And then way down here, we've got a few more areas of interest. That'd be 19.5, and then, of course, 18.8 on a weekly close. So, right now, Bitcoin going sideways, probably better for the bulls than it is the bears at the moment. When looking at our chart over here with the momentum pivot, this is the KVDB advanced stochastic. This is coming in at 26K for if we do see a close below $26,055 or so, it's oscillating around. That would actually be another cross down, at least an initial cross down, as it is more or less consolidating sideways. Bitcoin is currently trading below there. And if you want to compare this to a free indicator that you can get, you can pick up the KVDB advanced stoke over at app.crontrading.net. Again, I'm not affiliated with them in any way. I don't make any money if you were to ever do so. I'm just a really, really big fan of the developers over there. But there is a free version of a stoke that has a pivot printed, and it's the same. So it is $26,055. That would any closures below there would turn that back down. And when looking at the 2-day, it is headed down below 26,410. So if we were to see closures on Saturday's candle, of course, Friday's candle is not yet closed as I'm recording this, but if we were to see Saturday's candle close above 26,400, that'd be an initial cross on the 2-day stoke. We do have a 3-day closing today, and this may nope, actually I apologize, I was mistaken. I thought it was above the pivot, but this will update, still downside angled below 26,562, and it wouldn't take much to turn these back up, but just turning these back up does not mean go long. You need to see structure. You need to see a low set for whatever time frame you are looking at, and or a structural change. You can always degen or take risks like that, but that's on you. And of course, this is not financial advice in either direction, but I wouldn't advise it until you see fully confirmed crosses K and D to the upside. And you see a bit of a structure change or break, and at least a lower term time frame retest. Again, not financial advice, but if we were to see these turn up, where would that be on, where would the structure break be on the daily here? We can throw on a swing indicator, and we can see that we do have a bit of a lower high now. Could you say, well, we've got a higher low, higher high structure? Kind of, not really. On a close, I could barely call this a high. I would need to see this high right here. We would need to see a close below Wednesday's open, and that is going to be at $26,041. And hey, what do you know? We're trading right there right now, $26,041.94. We're trading at $26,036 as it kind of heads down a little bit here. That would actually confirm a 3-candle high structure from a closing perspective. But roughly to kind of call this out as like a bit of a breakout to the upside on a closing basis, that would be, and keeping in mind the areas of overhead resistance that I just talked about on the daily chart, that'd be above that 26,834. And I believe we were live streaming when this actually got hit the last time, when we were talking about it prior as being a notable area to watch for. And that's where I'd be looking for a bit further upside. And then that also means to the downside, any price action below today's wick low. And then we start, that's going to be at 25,750 here on spot price. Then we're targeting this guy down here at 25,350, anywhere below there. And we're right into that support zone, at least the first support zone down here at 25,214 to 24,750. So that's the way that I'd be evaluating price action over the weekend. And of course, if it does outrun any of those areas to the upside or downside, and refer back to the targets that we just spoke about earlier. When looking at the 2-day, we'll see that main target is going to be this guy up here. It's a little bit nicer to price action than only by like $30, but 26,820 basically to break that wick high, have a little bit of a short-term structural change, but you can see really heavy overhead resistance here from the wick low at, guess where, 28,477. Just so happened that when we saw a closure below there on the 2-day time frame, giant red candle down to our current trading area. And when looking at this with the Bollinger Bands on, we can head back to the daily and, generally speaking, if we do see that lower first recovered and we see that wick high taken out, roughly around 26,850, we'll call it, then I would be looking for a test up to wherever the basis band is coming in. And because the basis band will be moving along to the downside here with each closure, wherever that is where I would be looking for a bigger test, especially if it's around an area of support and resistance. So that, of course, in this case, approaching it from the bottom side, will be in a resistance zone and currently trading just under that $29,000. And do note that if it was recovered, the upper first is below this last high up here. So it's right in an area of overhead resistance there in the 29,425 area, which was the area that failed and led to this larger drawdown in the first place, swinging that area, failing it, and then losing the downside support led to this move down here. So I wouldn't, if we did see things just race right back to the top side, I'm not excited until I see that high at 30,200 to 300 taken out. Again, 30,300 up there is this weekly overhead resistance that was holding Bitcoin down the entire way through since back here in July. That would be Saturday, July 15th. So we've seen this area as a very big zone of resistance. Then that would mean if it was recovered, probably running the highs up here and marching on to new highs. And same goes for the lows here. If they're lost, we're headed down to some of the more major areas of support down here. So now the big one to watch for today at close is the 2-day and 3-day. It would be the 3-day today and 2-day tomorrow, excuse me. A reclaim of the lower second or the lower second sweeping under price action. So it's either price comes up and closes above the lower second standard deviation prior to closing the candle, or the candle closes and the lower second standard deviation swoops under price action. And that's where if we get the second scenario where the lower second moves under price action, then we look, typically what I would be looking for, I should say, is a move down to that lower second as support, or any moves into that lower second providing support. And then we could start targeting wherever the lower first is. And in this case, that's about $200 below that weekly overhead resistance there at 27,800. I do suspect this is going to be somewhere around the monthly daily area here, right here at 27.2 to 27.5 when this does close and open the new candle. When looking at that 2-day, you can see that this is what I'm talking about. The reason why I wanted to look at the 3-day first there is because we're already seeing this on the 2-day, where we did see a reclaim of the lower second. What you do want to see, and what I look for, is a move back to the lower second where it is rejected, or in this case holds support because it is a downside move. And then we can start to target that lower first standard deviation, and it especially becomes more of a viable target on any structural breaks. So in this case, even trading and closing back above this prior close at around 26,163 might be enough to go test wherever that lower first is coming in, because it might end up right on top of this wick after Saturday's closure around 26,800, as it is right there at 27K. So 27K even. Whew. My apologies, having a little bit of a rough time with my voice today. All right, so that's what I'm going to be looking for, at least over this weekend. And just to kind of update you on the 4-day, which is now in a new candle, it's still set up in a bit of a range here. We did see the lower second move down ever so slightly here at around 25,530. Lower first is positioned right there at the monthly, still at around 27,200. The basis is coming in right across the bottom side of these closes at around that 28,900 to $29,000. And we can see that the upper first is above this last high, lower high in this case. It is at $30,700. So kind of already pushing this high side structure over here. And, if we do see closures below the lower second, I would be looking for a little bit more expansion to the downside into some of these areas that are more relevant. Mid 24,000 to upper $24,000 area. Excuse me. And the low $25,000 area. We don't see a lot of, especially when you see a big range like this, or a ranging setup like this, it's pretty rare to see it start trending outside of one of those areas without a bit of compression. And we saw the compression back here on the move down. It bounced and just ran the top side. So now it's set up more, it's more of a range look. If we did see closures below, of course, it would beget expansion to the downside. But we'll likely get into areas that will create a stronger bounce. And then we look for, continuation of this downtrend, right? And or a trend break. We have we'll have a 5-day closure on, we'll actually be speaking again in a live stream format, hopefully, upon the next 5-day closure before it happens. And in this case, the lower second is right there at that 24,750, 24,7, 24,8 area. If we did see closures below there, that would indicate, 4-day obviously be closing below its lower second, a stronger move down, but probably a higher likelihood of a volatile bounce. In some cases, within those 4 and 5-day candles, we've seen them, almost fully recover on a wick after like really nasty downside moves. And we've seen some pretty nasty upside. I mean, this was that 31.8 tap and then closed down at 30,300. So not the nastiest we've seen. This was a much bigger drawdown that we just had. But in this case, the lower first is kind of capping price here as well around that 26,500 area. You can see it has been tested in the last 2 5-day candles. And, as we just range around, and then as we come into the weekly close, lower second, again, right in this ever so important area that, theoretically should provide a bounce. But if we do see a breakthrough and close below the lower second here, which is at the top side here on 25.2, then I would be looking for expansion further down into the important areas that I've talked about earlier in the video and throughout. The lower first has been tested as well, and that is at 26 700 to 800. Basis is coming in at 28 400, right in that big overhead support resistance zone. And after the breakdown, we moved right down to the lower second. So if we did recover above there, I would expect that area to be retested, and then we come back to it if we do see some closures above it. The upper first is right there at $30,000, and then the upper second is bracketing the highs just above, or no, I'm sorry, it's not just above, it's right in the wicks here around 30,500 to 600. So let's go ahead and go down the time frames and go over the pivots real quick for momentum. Currently, weekly's at 30,136. That has not changed, obviously, since the last time we spoke. 5 days at 29.5, 4 to 5. 4 day is at, it's a little bit nastier up there at 29.7. And then, of course, that 3 day that we just spoke about should update. And I do imagine it's either going to go sideways and or that number is going to go down at 26,562. And the 2 day is going to be 26,410. So if we did see the 3 day start to, the 2 day start to turn, that 3 day will start to turn as well. 3 day, of course, closing today. So it is likely that that momentum pivot moves underneath where price is currently trading, and gives the possibility of it turning back to the upside by, I believe it'd be Monday, if I'm not mistaken. At least Monday close. And then, of course, that daily is there at 26,055 bucks. Let's go ahead and, there was the Jackson Hole speech today by Powell. Nothing new came out of it. There was no big revelation. It's the same mantra that he's had for quite some time now. So let's go ahead and look at traditional markets. I know that everybody was like freaking out with this big red candle, and, it actually went and kept grinding the, the areas that we had spoken about the last stream, coming down to these highs over here, even wicking down and grabbing onto some of the liquidity. Yeah, from this high, it's basically just kept running this high area between these two highs. A little bit of a gap fill. We've already seen that gap filled plenty of times. From the move up, could it continue down and gap fill some more around 30, just under 34K? Possible. Decent bounce off the lower second. It's just kind of grinding its way down. And as I'd mentioned last stream, it's to be expected when the 2 day especially is in tandem with the daily there. It will keep the daily stoke kind of pointed to the downside, even though it is currently turned up after or upon this prior to closes at 34,216. You can still see downside moves. And in this case, we saw the close come in at 34,346. And after swinging that low, this is going to likely update. Both the K and the D read will most likely remain to the upside coming into Monday's open. And then we should see the 2 days going to be closing. That will be closing on Monday. No, it'll be Monday, Tuesday, Wednesday. Going to be closing on Wednesday, I believe. This is a little broken over here. But bounce here, like I had said when we last spoke, is this support resistance zone. It was, I believe, rejecting in that candle on the daily, or it was closing right on it. It was this guy here, so it was Wednesday. I mentioned that it's got to get above there to go test up higher, and it actually did test some of the areas that we spoke about, or just shy of some of the areas that we spoke about, but then dumped right out to the lower second, got a little bit more aggressive posture on that lower second standard deviation, and then a nice bounce off of it in the daily. And that's, kind of to be expected with the 2 day against that daily. 3 days also headed down. lower first standard deviation tap is likely on the 3-day. And that would hit a little bit more. Yeah, it's coming in right around that 33,966, so just under 34,000. I would not be surprised to see that, or even a move down a little bit lower if it does not bounce more aggressively next week. Coming into the end of August and early September prior to the Fed meeting, which, it does sound like they're going to keep raising rates. Not good for Main Street, and we'll see what Wall Street thinks of it. But yeah, I'm not seeing too much here in terms of possible divergences developing yet till we see a low in. Then there is the possibility of some longer term divergences, and you'll likely see them more on the 2 and 3 day timeframes, much as we saw one developing on Wednesday for NASDAQ and SPY, and I believe that was pushed back upon here. Oh, I didn't exit Steam. But one of my friends is playing Warhammer 30K apparently. So yes, I do like to play video games every once in a while. Let's see. Let's go ahead and look at that weekly. That's going to be the bigger one here. Yeah, tap on the basis band. Basis still north side here. And, if it did lose it, it's probably a quick trip down to the lower first here. The basis is currently at 34,174. So any kind of wicks below 34, likely going to start testing down further. If it doesn't get bought back up above the weekly basis by the weekly close. We did see it get bought back up this week. We'll see what next week holds, but the lower first is currently at 33,500. Again, I'm hearing a lot of doom and gloom, and you can make a case for more doom and gloom or more downside below the lower second here, which is at 32,854. And, that's a big drawdown in traditional markets. So, that's nothing to sneeze at, but, it's still not, I would not be looking for a big bad structural move to the downside. We would see a bit of a structural change on any closures below this low here at 33,610. Then it's about where does it bounce to? Because we've already seen when things chopped around this way, everybody was expecting it to go down, got higher lows, and then, made some new highs. So consolidation or dump out, I'm still seeing a lot of people calling for this low to get taken out. Look, unless it happens very, very swiftly in just a couple candles, I'm not looking for that right now. So, and we're coming into an election year here in the United States. We'll see what the future holds for this, but it is so close to turning on the daily, which might lead to the 2-day, which might just bring things right back to the top side, especially on any closures back above this wick high at 34,700. So that would be my outlook on Dow. Nas did have, a structural lower high now, but right back into support. If it can hold this support here on the daily at that 14,700, then, I'd be looking for things to bounce out. And in fact, it can even come all the way back down to the lower second. I had already mentioned this, I believe, prior. But, the lower second's right at the low structure here at around 14,560 to 14,600. And that, if we did see a closure below, then a rejection around the basis would be, just continuation of trend, right? And then expansion to the downside. And in this case, I would be looking, probably for short-term bounces again, right around that lower second. But if it is lost, then we're looking down here around 14, 2 to 300 or so. Maybe a pit stop along the way around 14 and a half. But, probably looking 14,200 to 14,300 or so. Yeah, that'd be the next area to keep an eye on. And yeah, there's some high side structures over here. So there's some highs over here to hang on to. And when looking at momentum, it's actually, the move down was against the momentum pivot, although it is still a structural downtrend. Got a little bit of bearish divergence playing out there as well. 14,624 will keep that turn to the upside. What was the close? 14,848. So and we did get our move up to the areas that we had spoken of, right around this low side structure and this high over here. And, pretty brutal sell-off after that. But again, there's likely to be some more bullish divergence built off this if a low is put in here. The 2-day, I believe, is starting to turn or will start to turn. Yep. We did see that bullish divergence was rebuffed as a low is not technically in, as I hit my hand on the microphone stand there. Sorry. 14,873. We'll see that keep heading to the upside. I'm sorry, this closed at 14,941. I was reading the wrong thing. I'm so sorry there. 14,941. So this is now going to get a completed cross up. 14,941. I was reading the gray pivot there, which is the lower first standard deviation. But yeah, 14,873. Likely to head back up as long as it's holding that lower second on the 2 days, well, which is around that 14,600 to 622 area. Then I would be looking for another test to the basis, tested right on that basis band already. And if it can recover above there, then I'm looking for that'd be a higher low and then a structural higher high. So we would have a structure break and then a bit of a half of a trend change there. And I would be looking, somewhere around the lows here to get tested around 15,425 to that upper first at 15,576. Again, it's got to at least maintain above that wick low at 14,560 to that lower second standard deviation on a 2-day close. And that's coming in at that 14,620 or so. And then above the upper first, it's right back to the highs here, and then make new highs on this trend. And the weekly, likely, we haven't even seen a basis band tap on the weekly. So this is, much ado about nothing so far. It can still head down and test in and around that 14,500 area on the weekly. Although I don't think it could stop there if it's a wick on the weekly, but as it stands right now, bit of an inverted bull hammer. Not really much to make of this, to be quite honest. Back above the upper first, 15,369. Nice. Of course, this will move up, so I imagine the basis is going to be somewhere around this support to the low side here, because it is at 14,500. Probably going to be around 14,600 to 7. Or we end up seeing it inside of this this support resistance zone at 14,700 to 900. And if we do see closures above that upper first, which is currently around that 15,369, nice, to probably 15,500, then I would be looking for new highs up to, I'd be looking for the highs to get ran again up to that upper second around 16,240. And of course, that's not all-time highs just yet, but it would be within striking distance. And this can pull all the way back to the lower first and still, looks fine from the weekly bull band setup. That would be a brutal sell-off down to 13,630 as it currently stands. I suspect it's going to be a little bit more around 13,750 to 13,800 area. This is a pretty steep incline, so it might even outrun that. We'll check on it on Monday's open. But so far, I'm looking for a little bit more of a bounce, probably sometime next week. if it can maintain the low side structure. I'd be looking for a little bit of a wider bounce, I should say, because we already did see a bit of a bounce this week. So, but a much wider bounce is what I'd be looking for if the current lows can be held across Dow and NASDAQ. And when looking at SPY, same thing. If it can put in a higher low, especially, then it's going to be, probably a retest of this basis band up here, which is currently coming in at, the close open here at 444, just shy of that 445 target area. And then I'd be looking for the upper first area at 451 to the overhead resistance at 452 to 453. Now, what you don't want to see if you're bullish is just a gap fill and then sell off around that upper second standard deviation at 457, 458, or something that even runs the high and then sells off and continues to sell off. Probably going to see some initial resistance should things trade back up there anyway. And as long as this is holding the lower second and the downside area here on the SR level at around that 430 to 431, lower seconds coming in at 432.61. I suspect that's going to update and swoop up a little bit. But as long as things are basically above the last low, looking pretty good. If it can maintain its structure above there, then I'd be looking for a wider bounce. And, that's going to be 434.95. So, traded up to 439 and then post market just sold off a few cents here. So not too bad here. 445 was the 2-day momentum pivot. And it will remain the 2-day momentum pivot there. So if we do see 445 reclaimed, which is basically back above this high here, then above the basis on the 2-day here at 446, and I would be looking for a run right to that upper first around that 452 to 453 area. Above there, looking to the upper second, which again, this is setting up for a bit of a range. If it was to keep heading up, that upper second's just above the highs here at 459.50 or so, coming in at 459.41. And if we did see closures below the lower second on the 2-day, then I'd be looking for a bit more of a drawdown back to this low and lower around that 431, losing that support. Then we're looking down at least into 430. If it doesn't bounce and reclaim the lower second, then we come back to it, probably looking at a bit of a markdown into the 420 to 425 areas where there is a gap. Weekly, again, this hasn't even hit the basis, although the basis might rise to where this prior wick low was, or maybe even the current weekly wick low at 430. 3 to 435. If we do see closures below there, then I would be targeting somewhere around wherever the basis band updates to. And it's currently coming in just below this 420, 418 wick high over here, which is, it's currently at around 417. But I'd be looking for basically lower first to be around 420. And then we come back to it from there. When looking at Dixie, Dixie did leg up, had a nice weekly close. It's targeting the next high. This is something that we had talked about. If it broke out and closed above, the upper first on the weekly here at 103.57 to 103.60, then we're looking at the next high where the upper second's coming in around 104. 104.67, maybe even a swing of this high, as this will update and be pointed up above this overhead resistance. And then we just look to the next high side structure, either on a close at 105.25 to 105.88. Now, the weekly's looking like it's got a little bit more to go. Now, again, it's in an area right around the edge of the bullish control zone, 170. This will update, so $100.70 is currently the momentum pivot. I do suggest checking on this again on Monday, and I will follow up with it. So let's go down to the daily though, as the daily is still, it can stay up here in the overbought zone for a while. 104.15 is going to be the momentum pivot. It is just grinding that upper second and maintaining that upper first here. And I do suspect this is going to open and be somewhere around the highs here, that 104.69 nice area. If it does lose that upper first, then we start looking for where is the basis. If it's on the support, then it's probably going to bounce around for a while before trying for another higher low in this case. This is calling this a higher low. This could even drop this low and it's still fine. I can come all the way back down to 102.60 and still be perfectly fine. I suspect the lower first is going to be around that area when this updates on Sunday, when we see this open again with CME. 2-day above the upper first, tagging that upper second. It's likely going to move up pretty soon here to that high and higher there at the 104.69. Then we're looking back in the low 105 region, 105 to 105.25, at least on the shorter term targets. 2 days still rocking and rolling, keeping that daily stuck to the overbought zone. Is it getting, a little extended? Yeah, but until we see a high put in that, starts to lose some of those critical areas on the bands. If anything, I'd be looking for it to consolidate in some of these areas of support, and then come back to it later and see what it looks like. If it did fail on the 2-day here, though, there is the potential wherever it puts in a high, at least in this area, anything below this 105.88 high, any closures below there that put in a high, likely going to see a bearish continuation show up along with a Stoke turn. So that would be something to pay attention to, as it is starting to get it's starting to get above some of the more critical areas here, but there's no in-trend divergences just yet. What might be a little bit more powerful is if it now this would be a continuation drive as well. If it put in a high on the weekly, that'd still be a continuation drive. And anything below this high over here on the weekly is that spike high at that 105.88. Now, this will tell you on a lot of indicators that this close here at 105.26 is the one to look for, and there's an argument to be made for that. Basically, I don't think this is getting tested unless we see a move into the upper second standard deviation on the weekly, and it is getting to that critical area where it's possible that if it's going to move to it, it's going to move through it and try to test that high, and then we see where it closes. If it is going to close above that high, then we can look for a leg up, probably significantly higher, as that would be a reclaim on the weekly. Over here at 105.65, and then we're looking at like order block areas, this low over here at 107, and then 110, and the deeper 110 area. But as it stands right now, it's doing what I would expect it to do after deviating that major support resistance zone. And that's where we can then look at something like gold, because I do want to see how gold is reacting to this. And gold is still, still on below the basis band is what I was trying to say. We talked about this last week into this past week, where I was looking for this to possibly become a deviation of this support or this low over here. And then we move back up to the basis band and evaluate from there. And as we can see, a high, it's not complete, but it will complete on any closes below 1911.88 here. It's basically losing 1912. And I would expect this to, test around its current wick low down to the lower first minimum at just under 1900 there at 1896. If it can hold that area and this low over here, I mean, heck, it could even move back to the lower second, but that would still be a close below this low over here. There is support, though, around that 1875 here. And that's this area over here, this high over here as well. So, I wouldn't want to see this last low taken out. Otherwise, it is going to be a trip down to that 1875 area. This is set up for, continuation of trend. The swing indicator is calling this a high already. I would need to see it close below that wick low. And then also, get below that lower first where this open is there at around that 1896, 1897 area. The daily is going to be headed up on any closes above 1888, and that's likely to update to around 1896, 1897 or so, around that lower first. The 2-day, I suspect, is going to look like a completed cross here soon on any closes above. Guess what? 1897. 2-day was a tap on the lower second, move and close above the lower first. So the 2-day would indicate that it does want to test up a little bit further at 1930 to 1933. There's an order block candle over here. So if it can continue to rally up above there, then the upper first is up there at around that 1960 zone. And, if we do see a completed cross, I'm questioning whether or not that's going to push that far. It might test up, but I have the feeling we're going to see a lower high on the 2-day because we don't have any real divergences to speak of, do we, that are confirmed? Oh, no. I guess we do, but they're just really long tail divergences, so they don't really matter. The weekly is going to be the big one here. 1920 closed just below there to turn that pivot. But that will update on Sunday when this opens back up. Tap on the lower second. It's not often that we see closes below there. Anyway, we did get one close below it. Nice little expansion down, retest, and then a move back to the lower first here at 1920. If it does reclaim that area, I would look for the weekly and lower term timeframes to start turning up. And again, at least go and test around that 1950, 1960 area. That's where the weekly basis is coming in. And then we look for a retest of those deeper zones there at that lower high on the weekly. We do have a lower high, lower low structure now. So we have this low that technically is a lower low than this guy over here at that consolidation high. And then we've got lower high, lower low. So it is a downtrending structure on the weekly, but it is in a reversal zone. So if it does reclaim that lower first and that basis, first, obviously take it in order. Lower first, got to trade above, this prior week's or this week's wick high at 1923. Go test somewhere around the 1960 area. If it can reclaim that, then we're looking around that 1980 to 1987 high. Rejections would be swings of this basis band around the close opens at around 1960. So if it couldn't complete, at least first pass rejections would come in around there. And then I'd be looking for the wick high if it can push on through around where that upper first is. And then if it reclaims that, we're looking at the close open structure up here around, $2,000. So that's going to be it for today. We'll go back and that's it for the main analysis today. We'll go back and we'll take a look at the swing fail setup. And we're going to pull out a different chart here. We're going to look at the Bitcoin open interest chart. Let's go ahead and update it. And I have marked this up a bit. And you know what? I'm going to need to do. I guess I need to subscribe to do that. Let's go ahead and load a layout here. And then we'll full screen this. And this is the hourly chart. Now I want you to note the range that we are in. Currently going sideways. We have this wick low, which is a breakdown in open interest over here as well. So when I don't have, you don't get the same tools, but you do get an arrow. All right. So this wick low here, that's not the right color. Okay. This wick low here coincided with a breakdown in open interest here. It was still heading down, but it was a breakdown. Price went sideways from here, right? So price is going sideways. Open interest trended down, bounced a little bit, and then headed down on this candle over here. Open interest dumped out, after a retest of this wick lows open interest read. It dumped out, but price held up that wick low. And then ever since, we've been consolidating on open interest, and now you can see price is quite a bit higher, at 26,042 bucks. Open interest is quite a bit lower. So we have declining open interest within a consolidation range. Now, typically, I'll point this out because typically when open interest is rising, so is price. And then when it gets to extremes, that's when price, dumps out. We get an open interest flush. And this is the open interest chart. And you'll note, looks pretty similar to the price chart. We've got, open interest moving up here. Open interest moving up off of this spike low back there. We had a spike low in open interest, then it moves up, price moves up. Open interest going sideways, price is going sideways. Open interest got made a higher high, price made a higher low, a lower high. So higher high on open interest on the close, lower high on price action, dump it. So we had a divergence. And now on the other side of this, we have a higher low structure up there. So that would be, if this can put in a low here, then this guy over here, right? So we've got a potential higher low structure than the previous low, but we've got much lower open interest on the closes than we did on that prior rundown. And that was the 24,750. So we have a potential bullish divergence. So on the top, we had bearish divergence, higher high in open interest, lower high on price, boom, drop it. And if this can put in a higher low than the prior low over there, then we would have a lower low in open interest, higher low in price action. Most likely we see things move up. That doesn't mean it's going to move up to new highs, but it most likely at least gives us the indication that it's going to retest the low side structure before maybe moving on for further downside. That would remain to be seen. But that is something to, I think, pay attention to. And when looking at the swing fail zones here on the 15-minute chart, I have marked off some key areas that I have been trading off of recently. And that is when in conjunction with, it's kind of a follow-up from the prior conversations we've had about this. When combining a swing fail pattern with volume, you can see that the key areas are marked with of volume. Those candles are marked with the horizontal rays. So this particular move down earlier today, I believe this was just prior to Jerome Powell speaking. We saw a dump off. We saw a run of this particular higher volume high that was set up here, and it might benefit me to turn that off so you can see this a little bit better. But we had this this high rather that was set up here. That was on a little bit higher volume, and then we actually saw some of these lows get set, and we saw some higher volume build on the move back to this zone. You see this swing low here that closed above this area right there at 26,298, 26,300 area earlier in today's session, spiked that area and then dumped it right back to this this low right here at that 25,800. High volume there, and then it just kind of trailed off sideways as volume has been decreasing. Now price is kind of trapped in that 25,800 to 26,300 area. And you can see that if we had gotten continuation below this low here, then we look to the next higher volume area, which is this guy here at 25,600 rather. If that area of higher volume, that swing low gets taken out, then we target 26,350, and then the wick low at 26,200 or 25,200, 25,350, 25,200. Man, rough day today. But that's kind of what I'd be looking for. And now because it was higher volume on the high up here, and the low, I would say, if we do see a break of 26,300, probably testing these highs, maybe even 26.8 to 27K. If we do see the low side structure here, we're looking at 25.5, 25.6, down to 25,350, and that low at 25.2. If we see a breakdown from there, then it's right into that big liquid zone at 25,200 to that 24,750, possibly wicking below it if we did see a more aggressive move into the mid $24,000 area, and then come back to it, see if it hits that weekly down there at 24.3. And that would be, basically trading below. We can trade below this weekly here at 26K on those lower term time frames. That's more about the closes right now. If we did see a daily close below there, I would start targeting more aggressively. I'd start targeting these wick lows into that daily support and lower second, possibly even past it down into the 24 5 to 24.3 area. So yeah, I'm gonna get going here as I start falling apart near the end of this recording. You guys have a wonderful weekend, a wonderful morning, afternoon, and evening, no matter where you are in the world as well. And please trade safe and stay safe as always. With all of that being said, Landy out.